Edelweiss and CNBC-TV18 present Change India, what India needs.
$1 trillion for infrastructure, 500 billion for manufacturing. Ask somebody else and you'll possibly get different numbers. But the point is that India needs a large amount of capital and it needs it quick if it's to grow fast enough to meet the mounting aspirations of its over 1 billion people. And capital goes to places where it sees good returns, good governance and good prospects for growth. Welcome to Change India, where this week we discuss what India needs to do to become an attractive destination of capital, domestic and, as important, foreign. Joining us is a panel of some of India's finest financial minds: Akhil Gupta, Chairman of Blackstone India; Nilesh Shah, MD and CEO of Axis Capital; Navneet Munot, Chief Investment Officer, CIO at SBI Mutual Fund; and Nitin Jain, Head Capital Markets at Edelweiss Securities Limited. Gentlemen, pleasure to have you with us. The mood certainly has changed, but what does the government need? Or let me ask you, let me put it in your language, Akhil. If India were an entrepreneur looking for money and it or she came to you, what would you say he or she needs to do?
I would say just one yardstick. That is, if today, if you look at the ease of doing business, we rank like about 150th or something. I think we should strive to make that to at least top 50. And then leave it to rest to the entrepreneurs, right? The investment community, you know, the role of the politicians, the bureaucrats is to make that happen. Everything. This is the only country, large economy, I would say, that has the potential, and not just the potential, everything is placed for us to grow at 8% for the next 20 years.
Okay.
China has done that, Korea has done that, Japan has done that, Brazil has done that, Singapore has done that. We can do it, and we were on that track, except the global financial crisis happened, and then we had a governance crisis. I mean, we have to reduce bureaucracy, we have to get rid of all the archaic regulations. I think this incremental change in regulations don't help, because you're still carrying the legacy. The economic structure, structure of the economy is very different. The marketplace is very different. It was not such a global economy as it today. Today, you have to have a completely different set of rules, and you cannot look at the past and make incremental changes. You have to look at from first principles. What kind of regulation do we need? And the second thing I would say, we should try and rely on the market mechanism. Market has an amazing power to make things happen. And, you know, regulation job should be to prevent abuses and excesses, but let pretty much 95% of the transactions happen, you know, through the market mechanism. That's what we need.
Okay. Nilesh, are you confident that we can move down the path? Because the ease of doing business, as Akhil says, is we are way down the ranks. How easy is it for us to leapfrog into, say, the top 50?
I think it's relatively very easy. All it requires is mindset change. And in some parts of India, we are already doing that. So in the state of Gujarat, Thermex put up a project where the approvals came in 15 days. And they were putting up a project in Maharashtra where approvals took about 3 years to come. So in one part of India, we know how to do it quickly. Other parts have to just copy from there.
And this is using the same regulations.
Precisely.
So isn't it that a little more difficult getting that mindset change done? Because if it was just a stroke of the pen, it's perhaps a little easier.
I think there is an awareness today broadly in the political class that electorates are electing those governments which have done something for growth, something for employment. So I don't see a problem from changing mindset on the political side.
Okay.
The second thing is again from the entrepreneur side. There has been various examples of different entrepreneurs who have succeeded in different ways. Now clearly they also have to turn around and say that, okay, we will use market as a mechanism to succeed rather than using our connections and everything else to succeed. So we require mindset change not only at the government level but also at the entrepreneur level.
Namit, how do you deepen this market?
From the funding side, so of course, as you mentioned, that you need on one side ease of doing business, but you also need an ecosystem where companies or projects can raise money, both the debt and the equity capital, and that's why some of the moves like issuance of infrastructure bonds by banks or REITs or investment, the infrastructure investment trust and so on and so forth. But we need to ensure that a large amount of savings that we have, household savings, and a good part of that actually is going into unproductive assets like real estate and gold. How do they come to financial assets, and that can actually fund the productive assets, that can fund the, whether it's infrastructure or housing for all or non-renewable energy or whatever, all those projects. So you need to deepen that market, ensure that long-term savings come. So something like a US 401k, I mean, we've got some 40 million odd mutual fund investors, while you have 700 million bank account holders. Even if there are, let's say, 2 or 3 names for the 2 or 3 accounts for one person, but still there is a huge ground to cover. We need to ensure that. So whether the same ease of doing business, a single KYC, once a person has opened a bank account, he can actually invest across all financial products. Similarly, I mean, ensure that how the companies, the way they do in US, where they can deduct from the salary or from the payment they are making, and it goes into a long-term savings. We need to build that culture, need to invest in financial education.
Interesting point he raised about how do you get long-term capital into the markets. Is enough being done in India for that? Is enough being done to get insurance, life insurance, pension funds to come, Indian, I'm not even talking foreign, to come into the capital market?
I think, as you rightly put, there is a huge gap right now that we see in terms of at least the long-term financing. See, a lot of banks are very effective when it's about, you know, working capital financing. But there is a very specific skill that you need to evaluate projects and do long-term financing, and a very different kind of infrastructure is required for that. And today, I don't think we are equipped for that. In fact, if you see, a large part of savings is actually getting rooted to, you know, very unproductive assets, as he said about, you know, gold, real estate and all of that. If you can build in a mechanism which is more market-led and which is transparent, gives confidence to the end investor and gives at some level some kind of a protection, and that money can be channelized to making productive assets, but that cannot be done without a very strong mechanism of you know, government focus and buy-in and support to that. So I do think there is a big gap in terms of availability of capital for long-term financing.
Interesting that there is this feeling that Indians invest too much in gold, too much in real estate, unproductive assets. Is that because there are not enough opportunities? Do you think that needs to be controlled by legislation, or do you think that if growth opens up, money will just move into that? Money will just be taken from under the mattress literally and put into growth opportunities?
I think, to me, tackling the inflation is the country's highest priority, because that will lower the interest rate. That will also then make a lot of projects which are stranded now viable, and the money will start flowing. The consumers' savings will get recycled into, you know, it won't happen overnight, but long term. I don't see any issue that if we have stable financial markets and steady growth of 8%, which will be mirrored by, you know, stock market steadily going up, and obviously Nilesh, you're the expert on that, not me. Then I think retail savings will get channeled to the financial market.
How many people sell mutual funds? How many people sell gold? The distribution reach of gold will ensure that no matter what legislative change we made, savings will continue to go to the gold. The sheer distribution power. I mean, today, I don't think so. We have a mutual fund agent in this country who can go to a housewife and collect her pocket money or secret money.
Whose fault is that?
To invest
is it yours, or is
gold.
the fault? Is it the industries? Is it
the fault
legislation? Is it?
You know, it's purely the incentive. I work for money. A mutual fund agent will work for remuneration. Today, when I'm selling gold in smaller denomination, I can probably charge 25 to 30% premium. If I have to earn 25 to 30% in mutual fund selling, probably I have to wait for 30 years. So clearly the gold is being sold because the incentives are heavily aligned in selling gold. The second thing is also mindset change. All along we have been told that equity is risky and hence it gives higher return. I think we need to change the communication that not investing in equity is risky. In this budget, I think we have taken a very important step of single KYC. I mean, today, many a times people are not investing because of the paperwork. If I have to fill the IPO application form, I'm not sure whether I will be successful in filling that after spending so many decades in financial market. So single KYC, simplification of paperwork, I think that will bring investors back into the market. And if we can realign this distribution incentive, which can repair this distribution network, which can then go and link the last mile connectivity with the investors, I think we will see a revolution in our market.
Edelweiss and CNBC-TV18 present Change India, what India needs.